Phoenix at the team.
Right, ladies and gentlemen, welcome back. We got another episode of Chart Talk in the building. What do we got? Chart Talk 104 maybe? 103?
I think 104.
What we got over here? 104. Lucky number 104, of course. We got a great momentum market on our hands. Let's get right into the market outlook. And, we're seeing that trend we've seen over the past 3-4 weeks now where the stocks are just skyrocketing higher. We did find some weakness today, but it was bought up off lows. There's a ton of relative strength out there. So make no mistake, this pattern will break at some point. But until then, I plan on just keep taking advantage of the momentum that we're seeing. And, it's been pretty, I don't want to say easy and jinx us, but, that the market's been very forgiving with setups to the upside, at least with if you're in the right space, the right earnings names, the strongest ones and things like that. They've been shaking off any market weakness and continuing higher, like we'll talk about later. What are you thinking over there?
Yeah, no, same thing. I mean, I guess this market's been pretty relentless since we took out those prior highs in the SPY. We saw the same thing with Nasdaq on a absolutely monstrous run. We saw the material sector getting back up to its highs again, very extended off its recent support. We saw the same with the REITs, same thing, retesting that prior high. And one sector that it's setting up is probably the most boring sector, is the telecom sector. It's still actually setting up where it's not wildly extended relative to the other ones. But definitely that same similar with you, Shake. It's you got to keep take advantage of this run up and just be aware that eventually even like we look at Tesla, had that insane run and then gives back a significant percentage just today alone, and that's kind of the move maybe not to that drastic extent, but it's similar. You get that big up move, and eventually, we do get some rug pull if and whenever that does happen.
Yeah, and it's so funny talking about that Tesla. I was wondering over the weekend, I was like, is this like the easiest short of all time? Like Elon talking about selling 10% of his stock, which would be like a $2 billion liquidation from the stock. So I'm like, either this is the easiest short of all time or what, and it ended up being pretty true. They did wait till Tuesday for it, which is very surprising, but yeah, they took that thing out of the woodshed today.
Yeah. I think he's the only
12%. Woof.
Yeah. Like he's the only insider or CEO of any public company who's ever been cheerleaded to sell their stock. I don't think usually anytime an insider sells, it's always like they're the worst, they're the devil, they're the rich, whatever. And Elon somehow spun it as the only way to make it a positive of him, being selling it at that best possible price. Well, everyone wanting him to do so.
Right. And the real reason he did it, he has all these options and warrants expiring, and he'll have this crazy tax bill he'll need to pay anyway. So he has to sell some stock in order to afford being able to pay this multi-billion-dollar tax bill. So it was all just a ploy for all the theatrics that he loves and getting everyone to talk about it and spinning selling 10% of his stock into a positive. It's not a positive. At all-time highs.
Well, the guy is a genius. Anyways, do you want to get in some top ideas?
Yeah, I got a lot, so I'm only going to break down 3 or 4 of my best ones, but there's so much out there. First off, this doesn't have anything close to a setup in it, but this Roblox, breaks to new all-time highs. This is a name we've watched forever. Clearly, the market likes those earnings yesterday. So if we do see the market sell off, this is the first name I look to buy. It looks like it's got 150, 200 on it, written all over it later this quarter. Where do we go from here? I really like this WELL. Big explosive earnings move last Friday. 2 consolidation days since. Such a sneaky cheat code about these earnings names is buying through the earnings day high. It's not really talked about in books or anything, which is really surprising to me because it's by far my most profitable setup. So that's one there. It's through that 86.25, 86 area. Where are we going? KNBE, recent IPO. I bought a tiny little feeler in this one today because you have to give it such a wide stop with today's action. Mm-hmm. But this 28 area looks like it explodes up into those mid-30s right there after earnings. We love to see that. Where are we going? I really like this PGNY through this 68 area, or if it pulls back tomorrow. So it exploded on earnings. We love this name. And now it's looking for a pullback buy, maybe against the earnings lows, against this 59, 60 area, or through that 68 area in time. Looks really nice. CDW, you just see the tight consolidation on this one. Through this little pivot highs right here. What is that, 190 area? That one started to look really good, wedging together. CDW, then CCK looks good. Through that 108 area. Really setting up. I love these earnings, when earnings make a big move and then they consolidate that move and then they eventually break the highs of that move continuation-wise. Mm-hmm. That's my favorite setup, and it's just continuously got me paid in this market. And, I'll give them one more. What are we going to give them? How's this? CWH. I just bought the CWH a little bit right before the close here. Mm-hmm. Through this 42 against this 40 area. So I've been in this name for a long time in the long-term account. Setting up really well. It's one of those great fundamental names where they have, 100% growth every year and things. Camping World, who would have thunk it? I've talked about the stock a lot on Chart Talk. It's who's the CEO is Marcus Lemonis. He just keeps buying stock in the open market, and now we're finally seeing them get rewarded on their earnings with a big move. So now it has a huge move last week. It pulls in and finds new support in that area. So I bought 42 versus 40 today. That looks really good. Oh, and one more. UPS. I've been working into position. I started buying this one yesterday, added to it today. So this one gapped to all-time highs. Subsequent pull-in, has to find support, makes that move too quickly, and is now, beginning to find support. So this 210 area against 207 looks like a really great support buy. And I got a few more, but gotta keep some mystery over here. What are you looking at?
Of course. The one thing you mentioned with that buying that earnings day high, and you mentioned no one really ever talks about it. Nike is a perfect example of this. And I remember Mo called this out. This was last earnings when they gapped up. This was in end of June. And I remember he called it out. He wanted to buy up through that earnings day high. And I remember telling him you probably should kind of hold off on it, given that it just gapped up 10-15%, and it was really not much of a setup there. But it had a little inside day. The next day, it took out that earnings day high and just went on such a wild run. And that's just kind of going along with exactly what you said, those earnings day, buying through those highs, can give you those little tight risk opportunities. And that was one that I just overlooked and was just no, gapped up too much. It's not going to go. And sorry, Mo, definitely gave him bad advice on that one. A couple of names I'm looking at. First is this Triple M, just basing down here, a little bit more boring name. Up through this 184 versus 180. Next up, we have this CNC. One of the members brought this one up. Not looking to buy it today or tomorrow, just given how it already had that big earnings day move. So it's hard to buy 75 and be traded perfect versus 73. So if it could maybe flush up through 75 and pull back in and maybe set down the road, one to keep on the radar. Let's see what else. We have this ECL. Earnings are out of the way, up through this 232. Blue sky breakout. Been sitting out for since basically 2020. Traveler is another one through this 164. Another blue sky breakout. Buying it up through all-time highs. And last but not least is this UDR. It's a REIT name. Earnings are out of the way, and we can just see that clear level of resistance at that 56 area. And we've seen these just higher pivot lows recently. So you can kind of buy 56 for 54, and same thing through all-time highs. At least path to resistance is higher. So those are a few of the names I'm keeping an eye on for the week ahead.
Right. All right, sounds good. We're doing good trade, bad trade?
Yeah.
All right, I'll start us off. I had such a dumb trade in this TBOC. So, all right, it's coming off a big change of composure. Name's been pretty beaten up past year after it was such a winter during COVID and all that. But, it looked like it was setting up really tightly. And it was this day right here. It was the red day of November 2nd. So you can see it doesn't even eclipse yesterday's high, the day before high, the previous day's high. The entry is so clearly 153. So it spikes up intraday, and I start buying 152. And a $150 name, that dollar does not matter that much to put on full risk. And then the market found a little bit of weakness, and this thing sold off, and it took too big of a loss for what it was, And it was just like I never even should have been in the trade. It was really stupid. You just gotta wait for that entry point. That was very clear. What are the good trades? This FFIV. This one looks really good. It was really good. Who was it? So we bought this day right here. What we like about the name? So big move on earnings. Comes down, finds support, similar to how I was explaining that UPS setup. This is what happened in FFIV. Very similar setup. Comes in, fills the gap. We bought here this 214 area against these lows, and now look at us. It looks like it's flagging at all-time highs. Looks great through this 226 area. That one looks really good. And then today, this AMEH. Again, buying through these earnings highs, or when names make a big move and give you a consolidation day. Earnings are the biggest catalyst that we're going to see for a quarter. So this name can run for the next quarter. So what I loved about the setup is it reminded me so much of UPST last quarter. So UPST has been a big winner. And last quarter, I completely missed this move. I thought it had gapped too much, and here's what happened. It pretty much has these great earnings, and it gaps to this all-time high resistance level. Now, if you're looking at it daily from here, the stock looks pretty extended. But what was I just saying? Earnings, biggest catalyst we're going to see for 3 months. So then what happens? The name takes out that high, and look at this run it goes on. Absolutely crazy. It goes 170 to 400 in 2 or 3 months. Insanity. So this AMEH gapping up to the resistance level, that really reminded me of that UPST setup that I missed last quarter, so I made sure I didn't miss this quarter. And we had a red day today, and the name's up 11%. So, that one's looking really good. I think it's got some legs for a good swing trade. That's all I got, though. What do you got going on over there?
All right, I feel like the dogs are like licking your feet right now because I can hear you.
Yeah. There's a lot going on over here.
I can just hear you smirking. So I have 2 trades. Again, I was pretty light the last couple weeks, and my 2 main focuses last week were this STX and this MDB. Both very similar. STX was like a little earnings flag, bought up through 90 versus 88. And again, I've been talking recently, been doing a lot of these trading reviews with a lot of the members, and I've been spotting a lot of my own personal mistakes because I've had to go over my own trades numerous times. And one of my biggest mistakes was very rarely, if ever, taking profits into the up move. I typically just buy on the way up and raise my stop and eventually get stopped out. And noticing that I was giving back a lot of potential profits in some of these newer trades, I've been focused on trying to take some profits on the up move, just to build that habit back up. So in this STX, when this thing did start to break out, I saw this kind of prior high in this 94 area. So I threw a limit sell order, kind of a little bit above that high, just expecting a little bit of a flush. So I took a little bit of profits like that third day. And luckily today, I was just trailing it the last couple of days, just low a day. So, my stop was originally 88. After that first kick, I moved the stop to break even under 90. And then, as these next 4 or 5 days it just grinded, traded higher, I just kept raising the stop versus the prior low a day. And, eventually today, it was...
Did you get ticked out today?
No. So literally to the penny. The low of the day was 96.89.
96.89.
My stop was 96.89, but I just didn't get filled. So
that is the best.
And you mentioned like the early morning weakness and kind of the market got bought up a little bit with some individual names, and I saw that with these 2 swings in particular, where STX looked kind of crappy in the morning, closed phenomenal, while MDB looked very good off the open and just closed with like a little bit of doji. So still have the remaining position of this STX. MDB, again, very similar, another earnings flag. A couple of members are in this. We bought up to this 520. Same thing. We had the stop versus, kind of 500 area initially, and we got this nice kind of 40 move, and same thing, just kind of raising the stop versus the prior low a day. And eventually, as of today, stop is still versus that prior low day, under 558. But given that doji at highs after 5-6 days up, I did take some profits here, and if it wants to continue higher, great. If it wants to roll back over tomorrow, I'll take the 8-ish% gain. So those were the 2 swings I've had on in the last week, and that's all I got. That's all I got for you.
Back to that real quick, great lesson in that STX.
Mm-hmm.
This is the same thing we've been saying all day. Look at the move that it gave. The stock makes a big earnings, makes a huge move on earnings. consolidates a few days, takes out that highs, and just off to the races. It's such an easy setup. Just, not taken advantage of enough.
Yeah, couldn't agree.
So that's really where I've had my focus, and it's been great.
Yeah.
It's been great.
All right, Jake, so with that, we want to get into Book of the Week.
Ooh, I'd love to. So, quick, easy read, Book of the Week, Momentum Masters. It's interview style. It's all the guys that were in like hedge fund, market wizards, those books. And it's all about how they trade momentum. And with earnings season, all the momentum we're seeing, it makes a lot of sense. So it's Minter Vinny, David Ryan, Dan Zanger, and Mark Ritchie. Really quick, easy read. These guys just give, it gives good insight into like a very first person account. It's not like a book, like written, they don't even have time. They're just listening, answering an interview. So it's very real in that regard. That's why I really liked it. I've been reading a lot of those books lately. It's just so like, manufactured and everything has to be perfect. This is more real, which is what I really liked about it. So Momentum Masters with all those guys just mentioned. Quick, easy read. Love it.
All right. So I got two for you. I've been picking up the reading a little bit now that the little library area is done. So one good book, one bad. Everything is bullshit again, Jake.
It's so bougie. You're fucking so bougie.
I've read your
library area.
I read your Everything is Bullshit book and could not put it down. All the little stories in here were just phenomenal. Highly recommend this one. And then what I wouldn't recommend is The Truth of the Stock Tape. Just like you mentioned like last week one of the books that you read where it could have been like 20 pages, but they stretch it out to 200. And this was kind of the same thing where he goes over like a lot of stocks like in the early 1900s, but walks you through like if you just looked at the stock chart, you could see the stock went from 20 to 100 and then back down to 10. And you don't need to read 5 pages of the stock went from 100 down to 90, then up to 85, and it's like we're just repetitive of like every stock. Every railroad stock this guy could have mentioned, he walked you through how they traded. So it really wasn't much. Maybe 1 or 2 pages had something helpful, but it just seemed, just kind of drawn out. But Everything is Bullshit. That book was great. So hopefully.
It's really funny you said that about The Truth of the Stock Tape book because it was like marketed to me like maybe Instagram or something where I saw it. And I wanted to read it really badly, and then I forgot the name of it. I was like looking for the name, and this was it. And tell me it's bad.
Yeah, it was
$29.99.
Yeah, it was. I have not literally. Usually, every book I can find like at least 1 or 2 pages where like something is relevant, and I can like fold a page over, and like this whole book I'm just like flipping through, and there's not one thing underlined, nothing folded over to go over. So it's just not worth the read. But
all right, well, I guess that's all we got here.
That's
it.
it.
All right, folks. That's it. We'll catch you guys next week.